Financial ratio. First, it enables entrepreneurs to assess companies' performance and compare with other comparable firms in their sector. Besides, it also helps understanding financial outcomes and patterns over time and give crucial signs of organizational effectiveness. Financial ratio also do identify strengths and weaknesses from which to develop strategy and initiatives. Other than that, financial ratio helps to compare the financial statement of two or more companies. The financial ratio are used to estimate companies' budget figures and acts as useful instrument in quantitative analysis, which analyze both short and long-term financial and operational performance.
Now, we go to the calculation of ratio for Meraki Berhad in 2019. So the current ratio for Meraki Berhad in 2019 is 1.64 times, and the quick ratio for the Meraki Berhad is 0.93 times, and the inventory turnover ratio is 7.20 times. The average collection period in 2019 is 34 days, and the debt ratio for Meraki Berhad is 57.50%. Next, we move to gross profit margin. Gross profit margin for Meraki Berhad in 2019 is 20%, whereby net profit margin is 5.56%. The last one is return on asset and return on equity for Meraki Berhad in 2019. The return on asset for 2019 is 6.25%, whereby return on equity is 14.70%. Let's move into the financial ratio Meraki Berhad for 2020. The current ratio for the Meraki Berhad is 2.15 times, and the quick ratio for the Meraki Berhad in 2020 is 1.23 times, and the inventory of turnover ratio is 7.67 times. The average collection period is 20 days, and the debt ratio for the Meraki Berhad is 52.44%. The gross profit margin for Meraki Berhad in 2020 is 23.33%, and the net profit margin is 9%. Return on asset for Meraki Berhad in 2020 is 13.70%, and the return on equity is 27.69%. And that is the calculation ratio for Meraki Berhad in 2020 and 2019.
Next, we proceed to compare and comment the financial ratio. The first is current ratio. In year 2019, the current ratio is 1.64 times, and in year 2020, the period of the average collection is getting better because it only takes 20 days to generate the money and get the collection money back. The fifth is debt ratio. The debt ratio of year 2019 is 55.5%, and in year 2020 got 53.44%. The lower the debt in year 2020, this shows that in year 2020 is better because the debt ratio is lower than a year before. And we proceed to gross profit margin. Gross profit margin of year 2019 is 20%, and in year 2020 is 23.33%. And the item number 7 is net profit margin. Net profit margin of year 2019 is 5.56%, and in year 2020 got 9%. And the next item is return on asset. Return on asset in year 2019 is 6.25%, and in year 2020 is 13.70%. Lastly, return on equity. The return on equity of year 2019 is 14.70%, and in year 2020 is 27.69%.
So next, I will be presenting about the evaluation of financial performance. There has 4, which are first, liquidity, second is efficiency, third is leverage, and fourth is profitability. So the first one is the liquidity ratio. The liquidity ratio of Merakie Berhad is high. It can ensure that the firm will be able to pay its bills in a timely manner. Because when the liquidity of a firm is high, the ability for them to convert their assets to cash is easier. In order to gain some idea of the financial situation of a borrower or a customer, this analysis also is an essential for lenders and creditors before granting them a credit. The second one is the efficiency ratio. The efficiency ratio of Merakie Berhad has good number of activities, which means they perform well. The firm able to collect cash from customers to convert inventory to cash within a short period of time. When the transaction of a firm happens frequently, it shows improvement in the efficiency ratio, where the profitability of the firm also increasing. The third one is the leverage ratio. The leverage ratio of Merakie Berhad is low. A low ratio indicates that a firm may have incurred a lower level of debt that it can be reasonably expected to service with ongoing cash flow. The possibility of bankruptcy is not high. This ratio is important for lenders and creditors to measure whether it is worthy for them to channel their funds or not. And the last one is the profitability ratio. The final performance of Merakie Berhad is excellent, where the firm reached their target. The accumulated profit of the firm is rising, and the owners aware of how their funds profitable have been correlated in the firm.
Conclusion. To summarize, by using ratio analysis is very important for the company in order to analyze its financial position, liquidity, profitability, risk, solvency, efficiency, and the operation effectiveness for a proper utilization of fund, which also indicates the trend or comparison of the financial result that can be helpful for decision making for investment by the shareholders of the company itself. From the view of Chem Bank Finance Officer, the calculations of the loan should be approved because of the following reason. The first one is the inventory turnover ratio in year 2020 is 7.67 times, which is better than in year 2019, just 7.2 times. This means that the company was able to restock more and gain more profit. The second one is the average collection period in year 2020 is 20 days compared to in 2019, which is 34 days. The shorter the collections of period, the more benefits that the company will get. The third one is the gross profit margin in year 2020 is 23.33%, which is higher than year 2019, which is only 20%. This shows that the ability of the firm to generate gross profit from sales become more effective during 2020 compared to 2019. The return of assets for 2019 is 6.25%, and during 2020 it increases to 13.17%. This shows that the assets for 2020 is higher than the assets for 2019, showing an improvement in the assets of the company within 1 year. The more asset that they have increases the potential for them to pay for the loan and secure the agreement itself. The last one is the debt ratio of firm has decreased from 57.5% in year 2019 to only 53.44% in year 2020. This indicates that the debt uses by firm in the business compared to total assets got decreases, which is good and able to survive with less debt.